Hello everyone, and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will discuss hacking, phishing, cybersecurity risk and stock prices.
Hello everybody, my name is Radovan Vojtko, I'm CEO and Head of Research at Quantpedia. Today we will discuss cybersecurity, hacking, phishing and all of those stuff, and what's the impact of this on financial markets. Welcome to our video. It's year 2023 or end of the year 2023, and we are living in a cyberpunk reality. So the world is run by mega corporations, multinational corporations. They have their own agenda. And on the other hand, there are hackers that are trying to break into those corporations, steal the data, steal some money, etc., etc. So we are really living in the future. There are a lot of the hacking, a lot of the hacks, and they influence the corporations. So here is just a quick article that shows the top 10 known hacks of all the time, and what was the impact of those hacks on all of the corporations. Now the question is, what's the impact of those hacks on financial markets? Because there is impact of those hacks. Firstly, of course, there is a market that's very prone to the hacks, and it's a cryptocurrency market. Significant part of the volatility of the Bitcoin is driven by the news about security, hacking attacks on Bitcoin exchanges, etc., etc. That's like one of the most important factors that's driving the prices and volatility of Bitcoin and all of the cryptocurrencies. There is an interesting paper that's related to this topic, and it's showing what is exactly the influence. Now, the question is if there is also impact on stock prices. The answer is yes, it's also very significant. So there is a paper from Seleni and Marechal from 2023, so it's a very recent paper. They calculate or present the cyber risk measure that's implemented by dog-to-vec model. They use this model to estimate each company's cybersecurity risk based on their 10K statements, and then they are trying to come up if the risk is priced in the cross-section of the prices. So we can build a long-short strategy on the cyber risk sorted portfolios, which has an economically significant alpha, and it's uncorrelated to traditional factor models. The alpha is around 0.5% per month or 0.6% per month. If we sort our portfolio of the stocks based on how sensitive they are to cybersecurity risk based on their 10K statement, we can build a portfolio which has high cybersecurity risk score, and then we can build a portfolio with a low cybersecurity risk score. What are the industries with the highest cybersecurity risk score? Yeah, it's a business equipment, telephone and television transmissions, other retail, etc. And of course, the industries with the lowest cybersecurity score is oil and gas and utilities. The cybersecurity hack on those companies would have probably the significant consequences, so they are the most resilient one. If we go long the companies with the high cybersecurity risk score, we get the significantly higher performance. So the performance of the portfolio 5, so the stocks with the high cybersecurity risk, is significant, but the reason for that is because the risk is high. As we can see, the cybersecurity risk is really priced in a cross-section of the prices. So those hacks, they really have an impact on financial markets. I hope that you liked the current video. If you are interested, I really recommend to read the original paper by Seleni and Marechal of see what is the methodology, how to calculate the cybersecurity risk and how to build the portfolios. And I hope that you join me in the next video. Thank you very much.
Interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.